What's up, everybody? Today I'm going to talk to you about volume climaxes, my favorite trade. High success rate. Something every trader must learn: when to anticipate a volume climax, what does it look like, what are the characteristics, and how to actually trade it and execute it to your advantage. So what is a volume climax? It occurs at the top and bottoms of impulsive moves. Euphoria, stock's running, it's exploding, it's all-time highs, everyone's happy, laughing, dancing, they're making all this money, and all of a sudden, boom, big sell-off happens, and they're all wondering what just happened. Or in a fear cycle at the bottom, when pessimism, skepticism is at all-time high, people believe the stock's never going to recover, everybody's selling, they sell, then all of a sudden the stock recovers. This is the number one mistake rookies make. They want to hold for the euphoria at the top, and they want to sell for the climax skepticism at the bottom. Clear mistakes. This is a great opportunity for you to be looking for an entry or looking for an exit when you can spot the volume and climax. They can occur on any time frame. The key is you're looking for big moves up or big moves down, and they are typical to form shooting stars, spinning tops, dojis, and reversal hammer candlesticks. So the number one mistake, rookies make that don't really understand, and rookie is not a derogatory term, it's those that just don't understand it. A stock is running huge to the upside and they're so excited, they're happy, they don't want to sell because this is going to the moon, right? It's going to the moon, it's never going to come back down, and then all of a sudden they get the huge candlestick dump down. And what happens in these two cases right over here is that you get the volume climax at the top, the euphoria cycle ends, and then all the massive selling comes in, and those that panic that didn't sell over here, they end up panicking and selling down over here. And they sell down over here because they're seeing all the money evaporate, all the money that they had. They were so excited. And then what happens is you get a short-term volume climax down over here, and then you get a bounce back up. And what do? What do most traders do that don't understand volume climaxes? They get back in over here, not understanding that it's just another volume climax bounce, and now a new trend is going to start because you volume climaxed the euphoria cycle. You want to avoid this. You want to be able to identify when the volume climax is going to happen. If you're in a bullish trade and you're in that position and it's riding up and it's exploding, this is where everyone gets very excited. They're posting rocket emojis and saying we're going to the moon, and that's where I'm getting most concerned that we're about to climax and this chart's about to collapse. That's when you get ready to sell. You get your finger on the sell trigger, or you move your stop losses very close because you know that blow off top's about to happen. Or vice versa, the stock is absolutely collapsing. You're not in the chart and you're in cash and you're watching the stock absolutely collapse, and you say, okay, here we go. I'm starting to recognize the volume is increasing. I'm looking for a climax. And when the climax happens, that's when you get in while everybody's getting out. That's where the Warren Buffett saying comes from, be greedy when people are, I forgot about it. Be greedy when people are fearful, and be fearful when people are greedy. That's the saying, really focusing on these volume climaxes. So I'm going to show you some ideas, show you, how to spot them on the chart, and sometimes how they deviate a little bit, but really it's a very highly successful trade. I always like to joke, I get this trade 11 out of 10 times right. So let's get into it. I'm going to show you one example here, and reminder, this could happen on any time frame. So just focus on the impulsive move that's happening in the time frame. Don't look at equilibrium moves that get a bull break. Don't look at equilibrium moves that get a bear break. You're looking for big moves to the upside. And once you see the big move on the upside, you already start to put that thought in your head. I'm looking for the volume climax when this chart is going to hit its top or hit its bottom. Here's a case of Tesla absolutely exploding. And another thing is, guys, you can use this in any ticker. You can use it in penny stocks, you could use it in large caps, you could use it in indices, forex. It does not matter. So you see here we're getting a huge move to the upside. Obviously we're getting very extended, and you see here volume climax. So you see our volume, biggest volume we've seen at all these prices. And typical, you're going to get a spinning top candlestick, a shooting star, a doji, and in this case it signals the reversal. So at this point, this chart has stopped its uptrend. You're looking for a big correction. And just using this for example, this chart was trading up over here at 964. Before it bounced, it was down at 680s. 680. Think about how much this dropped. So people didn't sell here, they ended up selling here, and then they ended up buying back over here. And then what happens? The chart started its new trend down. Let's move on. We're going to talk about TLRY. This stock is absolutely exploding. Look at the volume climax, and you could always spot it early in the day. You look at the relative volume. Picture this was, just 15-minute candlesticks or 5-minute candlesticks. You would see this volume increasing this much compared to anything you've seen before. Then you would know we're going to hit the volume climax today. We should already be anticipating it because of how big the impulsive move is. So when you see it happening on the 5-minute time frame, 15-minute time frame, and that volume is much larger than any 15-minute candle you've seen previously, you know the daily is likely going for a volume climax. And what happens is you get a volume climax, you get a spinning top candlestick, and that's it. The stock dropped from 300 down to 93 in 4 days. So massive blow off top. Let's use this example. This is CGC. You can see the CGC stock was trading up nicely. Big move, popped all the way up over here to 1439. Look at the volume. See how the volume was increasing every day? Eventually, you get the euphoria run. So the stock opened up over here, ran all the way up to this zone. Big volume coming in on the day. Too much euphoria. That's when all the selling is going to come in and the stock's going to significantly drop. This day alone, dropped from 1439 down to $7. Okay, the stock dropped 50% in a single day. Volume climax. And then eventually you get that huge bounce, right? And this is the trap. This is the biggest trap for traders that don't understand this. They believe it's just going to go back up, and when they don't recognize, no, you had a volume climax, you're just getting a bounce, and then you're going to go into a new trend back down. Let's use another example here. Space on the weekly chart. Reminder, we're going through all time frames here. So you see the weekly, see how this chart was moving up pretty nicely. Look at the volume. All of a sudden we got some big volume on this candlestick, and boom, max volume, volume climax, spinning top candlestick, big upper wick. You always look for that big upper wick. When you see the volume coming in, whether it's the 5-minute, the 15, hourly, daily, whatever it is, you see that big wick and the big volume, boom, it's about to blow up. Be careful on these trades. Volume climax, look what happened. Major sell-off. The stock went from 42.49 all the way down to $9 before it caught a significant bounce. Well, there was a little bounce in here, but in terms of the weekly chart. Let's check out BA here on the daily chart. This chart is extremely selling off. So we're looking for a reversal to a bull bounce in this case versus the ones we just talked about, which were climax tops. We're looking for a climax bottom here. So you see the volume starting to increase, then boom, we get the biggest volume day. After this drop, we get a spinning top candlestick. We ended up trading sideways, and then bull volume comes in and pops up. So the daily time frame took a few days to really get going, but you can see this volume climax here marked the bottom, and that is the bottom since. And this chart bounced from $89 all the way up to $186. So essentially went up 100% in 4 or 5 trading days after the volume climax. So as this chart is selling off, you're seeing increasing volume. You're thinking maybe this day is going to be the volume climax with the lower wick, but it ended up giving you a lower open. So you had to wait another day, big volume, that marks the bottom. Let's move on. Let's look at space here on the 15-minute time frame. So something to be aware of, that oftentimes, and I would say not often, I would say maybe like 20-30%. I don't have an actual statistic on this, but after you get your volume climax, you don't immediately sell off. You actually come back and make a new high, or you make a new low. But one of the characteristics is when you get the volume climax, as you can see here, this chart was running up, you get a volume climax. It actually gave a little bit of a lower open, and then it ran it up. Volume climax way bigger than any previous volume here. Now it gets a little bit of a wick, and it starts to give you that indication that you're going to get the volume climax and you're going to sell off. But look what happens. It bounces back up, but look at the divergence. So when I see the volume climax and it doesn't get follow through and it goes and makes a new high, that's what I'm looking for. Top fishing play, and vice versa. If this same scenario happened with bullish divergence at the bottom, I would be looking for the dip buy on the new low. So in this case, new high, I'm not anticipating any follow through because we just had a volume climax. Even though it's come up and make a new high, it's a fake out. You got bearish divergence, and the chart ultimately breaks down. Very notable. If the volume climax comes and you still make a new high a few candlesticks after it, anticipate bearish divergence to form, or if it's at the bottom, anticipate bullish divergence to form. Let's look at another example here. CASPER huge run. You can see here the stock ran from $5.38 all the way up to 870. So we're up, what was that, 60-70%. So we know, you see here the volume starting to get bigger, and boom, we get the big volume upper wick. Next candlestick immediately sells off. So it doesn't need to be a blow off top where you get the big spinning top, big shooting star, big doji. You could start to see, okay, it's a big bull candlestick still, a little bit of a wick, but look at the volume. The volume is your red flag. You see a red candle appear afterwards, red flag, time to get out. What are you concerned about? If you sell and it goes back in higher, you can always buy back in a little bit higher. But in this case, you have to be protective of your gains because the stock's already ran huge, and now we're seeing the volume, and look what happens. It eventually comes all the way back down. Just in this case alone, 870 down to $7, immediate sell-off. Let's look at another one here, MRNA. Now, this is a case where the bell rings, and the stock's already been in a nice uptrend, and you see the bell ring, and you see the huge volume, and immediately seeing sell pressure here. Okay, so we opened, we saw some sell pressure, we bounced, but this volume tells me, look at all this volume that it took to get up into the zone. This tells me that we have a lot of profit takers. We have a lot of sellers. So people are FOMOing in, likely because of news. They want to buy this ticker because there's news, but all these people that bought it in over here consider the smart money is getting ready to sell it. Volume climax. Now it comes down, it comes back up right over here. It makes that lower high. It does not go. And then boom, the prevailing trend comes in. Very notable. Here's another example. Roku, you see the stock is exploding. The stock's been absolutely ripping to the upside. You see the big volume starting to come in. In this case over here, you see this big volume compared to all this volume. You know you're going into a volume climax day, but you're still waiting for the blow off. It could have been right over here. It didn't happen. This was the bell, the spinning top candlestick. It continued just to grind up all day. It was right at the end of the day, big sell off, and then the stock went down into a downtrend. Volume climax. Look at this bull volume compared to anything we could see over here. Last example we're going to use is a reversal here. Tesla selling off hard. You can see when it starts to get really impulsive, and it's a very sharp move to the downside. You see the huge volume climax here on this candlestick, but it's no lower wick. There's no bull hammer. There's nothing there. It's the next candlestick, still volume, but look at the lower wick. Next candlestick, look at the lower wick. So this is a 15-minute time frame. So if you were to have zoomed out in this chart to the 30-minute to the hourly, you would say, hey, we got a volume climax from our dump here from, what was this level, 880s all the way down to 684. We're starting to see huge volume here at the bottom. New trend continues all the way back to the upside. Key is, guys, to anticipate the volume climax to come when you're looking for impulsive moves. You've seen a stock that's exploding too much to the upside, a big correction's coming, or a stock is too much pessimism. Everyone's scared, everyone's bailing on the stock to the downside, and that's where you're going to catch your big bull bounce. When you play these types of scenarios, guys, you have to use it with liquidity stocks. You do not want to use it with a stock that does not have a lot of trades, that does not have a lot of liquidity, because you're going to be the only one buying it and nobody else cares. Hope you enjoyed the video. Give us a thumbs up. Peace out, everybody.